What's up, everyone? It's Scotty with Money Investing. Just give me a thumbs up if you guys can see me and hear me. We should be all set and all good to go here. The markets are rebounding a little bit from yesterday. They were pushing higher also. The day before that, we were very red. It's just been a lot of back and forth, right? It's just been red, green, red, green, red, green. But on a net basis, we're still down from all-time highs a little bit. And I have shared some of the things with our Discord members as well, kind of going over, reminding ourselves, our checklist are some of the things that are really important, how much we are down from all-time highs for individual indices and what that means for the markets, whether they're entering a correction, a pullback, a small dip, and of course going over the dynamics over the last 75 years and how the markets have weathered through this volatility. And of course, we've learned that S&P 500 has almost always rallied back up to new all-time highs, and only about 17% of the times it's down over 20%. So yeah, we'll see where we close today. We're not super green. It's not like we're up over 1% pre-market. The job numbers came out, which I updated everybody on over at our Discord. We'll cover that. We'll cover a bunch of different companies that have been selling off. We have the VIX pulling back a little bit over 6.4% as well. So a lot to cover to wrap up the week. And again, today is the first Friday of the month of December. So you guys know what that means. We've got the jobs numbers also coming out. So this right here is going to be the quick take on December 2021 calendar. So the first 2 days are done. So December 1st, we had the ADP report and Powell's speech. In fact, we had that a couple days. So on Tuesday and Wednesday, both Powell and Janet Yellen were speaking in front of the Banking Committee for Monetary and Fiscal Policy. There were a bunch of different questions relating from economic recovery, inflation, interest rates, all the different types of fiscal policies, spending, infrastructure bill, all that stuff was covered during that meeting. So make sure that you do check out that live stream as well. The ADP report was very strong. And then today we got that non-farm payrolls report, the unemployment rate, all those things, which we'll cover in just a minute. And then next week, we've got the JOLTS number, which is going to be how many job openings there are in the US. And then followed by inflation next Friday. And then following Tuesday, we've got another inflation report. So for the PPI manufacturing prices, on Tuesday, December 14th, but the week before that, on Friday, we've got the CPI. That's the Consumer Price Index. That's what consumers like you and I are going to be paying in the US. That's how much you're spending on each of those items. And then finally, we've got Wednesday, December 15th is when we have the FOMC meeting. So the next couple weeks are very critical, like really important for the markets because, in that meeting, we're going to learn more about Jerome Powell, Federal Reserve's policy on tapering. Are they going to decide to actually speed up the process and wrap that up very quickly? Because think about it, December meeting is here. We've only got like 2 to 3 months left if they actually do decide to speed up the tapering process, right? Accelerate that process, which is now going to open doors for them to raise interest rates very soon as well. So I think this is the meeting that we're going to learn a lot of things. The market's going to get more clarity, and whether that clarity means a sell-off or a rally, we're going to learn more about that during that meeting. And of course, a summary of economic projections, right? 2021, what is going to be their projection? In the past, they have raised their guidance for inflation and of course, GDP growth as well. But 2021 is almost over. We've got less than a month left, and this meeting is in the middle of December. So inflation expectations, I can only imagine they will spike to north of 5%, 6%, way above target from Jerome Powell and the Federal Reserve as well, which is, again, this is the situation that we're in. This is the environment that we're in. It's going to be interesting how Jerome Powell kind of weathers through all those questions because, of course, this week was very he was very under pressure, right? There were very nasty questions being asked from the banking committee as well. So this was obviously all the earnings from different companies. So CrowdStrike, Snowflake, Salesforce, Zscaler, they all reported. Docusign reported after the bell yesterday, which is now down a little bit over, I think, 30% last time I checked. I'll go over that in just a minute. But job growth disappoints in November with a gain of just about 210,000 despite high hopes. So the U.S. economy created far fewer jobs than expected in November before the new variant threat created a scare that growth could slow in the winter, the Labor Department reported Friday. And non-farm payrolls increased by just about 210,000 for the month, though the unemployment rate fell sharply to 4.2%, even though the labor force participation rate increased for the month to 61.8%, its highest level since March 2020. The Dow Jones estimate was for 573,000, so we have a mess of about 50% here, and the jobless level of 4.5%. Leisure and hospitality, which includes bars, restaurants, hotels, and similar businesses, saw a gain of just about 23,000 after being leading job creator for so much of the recovery. That's a very, very small number. And I think majority of the jobs are coming into the other sectors like financials, technology, some of the other sectors, which have obviously been not seeing as much growth as the leisure, hospitality, bars, all those different things. And despite this disappointment, markets largely shrugged off the numbers with stocks pointing to a higher open on Wall Street. This may be a rebound a little bit from earlier this week. Now, this can obviously be both good and bad for the markets. Of course, if it were a really, really strong jobs report, then the Fed can make a case that, okay, so the job report is really good. We can start to taper and accelerate that taper even more because the economy can handle that, right? And that leads to more quantitative tightening. That leads to a quicker quantitative tightening next year, which obviously is not good for the markets, right? So that can be seen as some type of a bad catalyst. But you can also make a case that, okay, so if the jobs report is that poor, then the Fed can essentially prolong that process of quantitative easing because the economy is not recovering as fast as they previously anticipated. And they can continue to kind of do the taper at a slower pace and raise rates at a slower pace as well. So it can play both sides. Of course, the goal has been met, so tapering is already underway. And again, like I said, December 15th meeting is going to be very important. This is the last meeting of the year, and we're going to learn everything about inflation, interest rates, unemployment, GDP growth, all 9 yards will be covered with the summary of economic projections as well. So, Deutsche Bank initiates Peloton at buy, says the stock can rebound more than 70%, and I'll go over all the stocks that you guys are talking about. So we will go over everything like Upstart, Neo. I see a lot of stocks, CrowdStrike, Fubo TV. So we'll go over all of that. I just got to finish and get through this, and then once we are on the same page with the economic data releases, with different analyst updates, then we'll go over some individual companies as well. So analyst Chris initiated coverage on Peloton with a buy rating, saying in a note to clients on Friday that stock's upside was too big to ignore even as uncertainty about the company remains. And there are scenarios in which Peloton still goes lower from here, but in our opinion, there are more scenarios that result in greater upside. Again, based on fundamental and unemotional analysis of the company's earnings power in normalized, fully reopening economic environment, the note said. Part of the concern about Peloton is that people will return to the gyms after the pandemic subsides, weakening the market for high-end exercise equipment at home. However, Deutsche Bank said that an increased customer base should prove to be somewhat sticky. And we think the hybrid work model extends to fitness too, and that Peloton is plenty of momentum to regain operationally. And Deutsche Bank set a price target of $76 per share on Peloton, which is 71% above where the stock closed on Thursday. So they have a very, very strong case. I do think that after the interest rates start going higher, there is going to be a little bit of a lack of disposable income for people to actually spend, which is why I personally don't think that Peloton, given how expensive they are, and home gym equipment are going to be that much in demand, that much in need. But they definitely see a lot of upside for the company. Here's some good news for Alibaba shareholders as well. So NYU's Dean of Valuation explains why he's ready to buy Alibaba. So Aswad Damodran, I've shared his videos plenty of times with our Discord community. I've also mentioned his name in plenty of my videos. Shout out to him. He's been absolutely phenomenal with the valuation analysis that he does. He put a price target on Tesla as well. Of course, it's far lower because he is looking at the valuation, right? Valuations in general mean a lot when you're trying to understand the company from a fundamental standpoint. And I shared his video as well. He's got a big YouTube channel. So again, shout out to him, all credit to him. He says he's now ready to buy shares of the Chinese tech giant Alibaba, which he says looks undervalued. A few months ago, I bought Tencent because I valued Alibaba and Tencent as a pair. I bought Tencent and I said, well, I think Alibaba is decently priced, but I'm avoiding because it carries more of these other risks than Tencent does. I think I'm ready to buy Alibaba right now, actually. He said. And shares of Alibaba have plunged in recent days amid the market concerning ranging from earnings miss, all those different regulatory headwinds. But he essentially says that Alibaba has quote-unquote layers of risk that have nothing to do with the company, including questions over the firm's relationship with the Chinese government. And Damodran said that those concerns appear to be keeping the stock price down. But definitely he sees that as a potential buy because the valuation is obviously very, very low for the company right now. It's a solid company in terms of the business it's in. The professor of finance at NYU Stern School of Business, and at the prices at which it's trading, I think it's notwithstanding all the worries about corporate governance and Chinese government. I think it's well positioned to be a long-term investment, but I think this is very, very important and interesting piece. He says, and I quote, "Let me be clear, this is not the kind of stock you want to buy because you want to make money in the next 3 to 6 months. I'm going to buy and put it away in my portfolio because I think it's a long-term it still has business model to deliver the cash flows that will keep my investment going. So a very, very interesting take. And if he does have a video on this, I will definitely check that out as well, on Alibaba, because it's certainly very undervalued. We've talked about it time and time again. And, if he's on board, I think that's a big influence on the stock, for me at least, because I do look up to him when it comes to valuations. The way he talks about things, I think it's a very, very reasonable, very logical. So, I may pull the trigger on Alibaba. I just have to find his video, kind of get his take, his analysis, then do my own analysis, do my own due diligence. If I like what I see, then possibly Alibaba will be coming out very soon. So this is already the U.S. economy jobs. Docusign obviously tanked 32% on fourth quarter sales guidance, came in at range at 557 million to 563 million. Analysts surveyed were expecting 573. They actually ended up beating revenue and EPS, but came in just with a really, really small, soft guidance for Q4, and the stock is down 30% plus. I mean, this is just absurd. Like, we've seen this happen with so many companies. Like, they will beat revenue and EPS, but they will come in slightly short of expectations for Q4 because of all the uncertainty related to the pandemic, the new variant, inflation, interest rates, money supply, everything. And there's no flexibility on Wall Street. I mean, the range of downgrades you will see is just insane. I mean, we've seen with so many different companies, right? They will just downgrade, and it's weird. They will downgrade the price target, but they will still keep their buy rating on the stock, and the stock will tank. Like, it's just incredible. DD Global shares obviously fell over 10% pre-market after DD announced that it would delist from the New York Stock Exchange and pursue a listing in Hong Kong. So we've talked about how DD specifically was being targeted from the Chinese regulators. Even before they listed on the New York Stock Exchange, they were asked to not do that, but they went ahead anyway. So this was obviously a very, very long-awaited risk for the company. Now, the real question really is this going to trickle over to other companies like NIO, Alibaba, Tencent, Baidu, XPeng, Li Auto? I personally don't think it will. By the way, the markets will be opening in under 30 seconds. Let me just quickly bring this up here, and we'll just open up the 4 charts as well. So like I said, I personally don't think that is going to be sort of like trickling into some of the other companies for the most part. In my strong opinion, again, I do think right now there's a lot of shift in market sentiment. There's a lot of negative sentiment as well around the Chinese potential delisting. But I'm happy to hear your thoughts as well. I personally don't think it's going to be a big deal for NIO, for XPeng, Li Auto, and Alibaba, because as mentioned in my previous video, it's going to be a very, very big sort of headline news. It's the both economies are so intertwined with each other in terms of foreign investments, that if that were to happen, we are talking like, relationships just getting destroyed between the two countries. So, that's important for us to keep a track of. But for the most part right now, obviously DD's delisting is pushing down a lot of companies, including, Alibaba, that's down a little bit over 4% right now, trading at $117. Like 117 for Alibaba, down almost 4%. How's XPeng doing right now? Down over 2.89%, almost over 3% now. NIO is also down over 4.6%, and then we got Li Auto pulling back over 5%. I mean, take a look at this. Is the Chinese watch list, right? These are all the Chinese stocks. Everything is straight up red. Everything. We don't have DD here, so let's just add that. So, all right, so we do. Where is DD? Oh, right there. So down over 4.3%. So, yeah, I mean, there's just a lot of weakness around here and in the Chinese front, and it really depends on what your thoughts are on the potential this regulatory risk that all these companies carry. And if you're not comfortable, then that's completely fine, right? There's plenty of other opportunities in the markets. You obviously don't need to just invest in Chinese stocks. There's plenty of other stocks in the markets that you can look at. But if you do believe that this is all FUD, if you do believe that this is all something that is not going to survive for very long, it's just and this is the thing, it was already a piece of the catalyst. It's just resurfacing once again. It's just, we're seeing more and more of that again here. And of course, finally going through with the delisting adds more to the volatility for some of those companies. But overall, right now, the markets seem to be doing okay. But yesterday's volatility was perhaps the most insane because, we were up over 1% for the S&P, the NASDAQ, and then dropped over, well, not yesterday, the day before that, and then dropped over like 1%. So 3% move from top to bottom for the markets. So at what price are you buying Baba? I have to do some analysis on that. I will be sharing that with our members over at our Discord. If I do end up buying, I will be sending out an alert as well. But definitely Baba looks very, very attractive here. And I cannot believe, I just cannot believe my eyes that it's now trading at $117 a share. I mean, this is not even a 3-year low. We're talking a 4-year low for Alibaba. Last time it was here was back in April of 2017. Wow, wow, just wow. So NEO also, trading now under $38, so that will turn into a resistance. Yesterday, I think at one point it was down over 10% on this fears around delisting, and the next support is going to be at $33, $34 per share for NEO. So Facebook, $308 is going to be that support right now at the moment, all the way down to $296. I believe 300 SMA sits right at $308. Right now, we're just validating and testing that 300 simple moving average for Facebook stock, by the way. I did receive a donation, so Mass, thank you so much. I really appreciate that. What's your thought on NEO, Baba? 3 stocks. All right, let's take a look at, so Baba and NEO, I think I already mentioned, right? So let's take a look at C3AI. So AI just seems to be on a continuous downtrend here from all-time highs. I mean, this stock has just been down over 83%. I mean, absolutely an incredible sell-off. Down about 79% year to date. Let's take a quick look on the price of sales for this company, because they probably don't have earnings or EBITDA, so I don't think we're going to be able to get any information on that. But you'll just see like how the valuation's contracted, right? It was trading at over 42 times sales, and now it's trading at roughly over 14 times sales, which still is a little bit on the high end from a traditional standpoint. But definitely, the valuation's contracted so much for this company that it kind of makes sense why it's been selling off, because a lot of companies, the valuation matter a lot, and we're seeing a little bit of a contraction here for the valuation. So, RSI very oversold, and so is the MACD. We just need to wait and see where it finds a new support before we can kind of start to look into the stock once again. Let's take a look at Snapchat. So Snapchat is right at support at roughly $48. So this right here is going to be at support level for Snapchat. Of course, the RSI MACD very, very oversold as well. Still trades at a little bit of a higher valuation. So I've done a complete dedicated analysis on this company as well. So make sure that you do check that out as well. But let me know what you guys think about the markets today. How are we going to close the week? Are we going to be red or green? What are your thoughts? Baba's down over 4.5% here. NEO's down 4.5%. We got JD.com down over 5%. JD's down over 5%. And then we got DD down over 6%. GOTU, I think this is like an educational company, down over 8% here. Li Auto's down over 3%, and XPeng's also down over 2.2% right now. Tencent will open very soon. This is listed on the OTC market, so it is a little bit delayed. Vertex is about flat, but let's take a quick look on the markets here and see how individual stocks are doing. So we got Upstart finally catching some bids at the support at 170. So 170, 169 is going to be that support level to watch for Upstart. Grab, GRAB. This is a stock that somebody mentioned to me, so I wanted to just add this to the watch list, keep track of it, and just do some more analysis on this. Yesterday was very, very brutal. I think for this stock was down over 20%. Right now we're just over 6.5% in the green. TrueLeave is up over 3.4%, so slightly in the green for TrueLeave. Teradyne up over 2%. Peloton, got that upgrade today, so we read about that earlier. Up over 1%. Then we got Skyworks, Novavax, Micron, Enphase, Walgreens slightly up over 0.5%. But overall, I mean, there's not a lot of movement in companies. For the most part, Chinese stocks are the ones that are getting hit the hardest. Baidu is down over 5% also, hitting almost a new 52-week low. Not yet, but the support level is going to stay put at close to 132. But Alibaba, Baidu, and we got NEO, XPeng, Li Auto just all getting absolutely destroyed right now on this news. Let's take a look at Docusign. So Docusign continues that momentum to the downside here, 36% in the red. I think we got a lot of downgrades on Docusign. So let's see if we can find that. So right here, Docusign's price target lowered to $220. $220 from $345 on a weak fiscal Q3. Wow. with billings falling below guide, leading shares down more than 30% pre-market, while the quarter's revenue and non-GAAP EPS exceeded consensus at 545.5 million. I just feel like this just goes to show how sensitive these models are from Wall Street. Like, how sensitive does the model have to be if they miss estimates by a small percentage and the price target just almost gets cut in half, almost. Like, it just goes to show how sensitive these inputs are that Wall Street's putting in. I mean, if I were to build a model and if their sales came in, like I'm projecting 20% increase and they came in 18% or 15%, like it wouldn't affect my output by this much. It would be like marginally, maybe I would cut my price target by like 5% or 7%, but these are like ridiculous downgrades on just one earnings. I just, it's surprising. And this has happened time and time again. We've seen this happen with Salesforce. We've seen this happen with CrowdStrike. We've seen this happen with a lot of companies that a lot of analysts will just like on that one day just downgrade. It's just crazy. But anyway, so Docusign, next support is going to be 131 at the moment. That is like a technical basis. That is the next support. But right now it just seems to be getting hurt quite a bit. Volume is really high. Obviously, 7.5 million shares traded at the moment for Docusign. Resistance is going to stay put at 179, 180 levels, all the way as high as 237 for the stock as well. And Alibaba, like a falling knife right now. Definitely does 114. Man, I tell you, this is just incredible. I mean, wow. NEO also not over 6%. Just, yeah, a lot of stocks just getting hurt. Fiverr, Fubo TV, Southwest. PayPal's down over 1.7% again. 183 is where we're trading right now. So, all right. So let's take a look at the markets here. There we go. NASDAQ just turned red on the day. We got the S&P also, slightly green, up over 29-30 basis points, and Dow Jones also. SoFi also pulling back here, just over $15. That is a support, by the way. $15 is going to be that support level to watch for SoFi next. Resistance 17.30, support level at $15 per share. And one of the things that we've talked about is, when you have something high valuation, high multiple, really. I mean, if you have something high multiple, just be prepared for the volatility, because one of the things that we've talked about is that once interest rates start going up, that is a reality check for the markets. Because if you think about the last I don't want to say 3 years, the last 2 years, right, since the pandemic started, what is one thing the market has not yet seen? Right? We've gone through the new variant, like we've gone through the story over and over again. Like we've gone through, cases going up here, cases going up there, like new variant showing up here, new variant here, there. Like that's been, the market's just gone through it. It's like rinse and repeat for the markets. But the one thing that's not happened in the last 2 years is interest rates going up, is some type of quantitative tightening, because we've all been in this such quantitative easing environment where there's just a lot of money going everywhere, right? So we haven't really seen what quantitative tightening feels like in this environment. And that's the first reality check we're going to see. That first rate hike, I think that's what's really important for us to see how the markets react to that. Higher valuation, as I mentioned during our Fiverr update as well, that higher valuation, higher growth multiples stocks could be under pressure in the short term, just given how we will start quantitative tightening. Yeah, so absolutely right. Haven't seen QE stopping. It's not normal. And we've gone over that, but the pros and cons of both quantitative easing and quantitative tightening, right? One is not better than the other. It just depends on a lot of different things, situation, environment. And we went over that in a video, which I highly recommend you guys watch. And think of it as a needle, right? Right now, we're like all the way to the left in quantitative easing mode, right? Where there's money being printed, the Fed's buying, X amount of dollars every single year in mortgage-backed securities, U.S. Treasuries, interest rates are really low. So we're at quantitative easing. And think of that needle just turning to the right, as we move towards quantitative tightening. First step, pulling back on quantitative easing, and then moving towards quantitative tightening. And that's what's really going to put the markets, at their toes to see how we actually weather through all this. So check support level at 25.30. So this right here is going to be that level. So we validated that support in the past. We validated that support right now. We're seeing a little bit of a bounce back higher from check right now. Valuation I think is reasonable for the company, right? 5 times sales, 15 times cash flow, and enterprise value to EBITDA at under 24. I think is a very very reasonable value for the price that you're paying. But again, the company can be trading at undervalued levels, as we already know with Alibaba, but the stock price can be under a lot of pressure because of the sentiment behind it, right? Stock price really driven by sentiment, of course, and the company, the fundamentals is the actual growth of the underlying business, right? Those two can be two very different things, and we've seen, many stocks with no fundamentals. Stock price has a lot of momentum. It will rally to new all-time highs, but many companies that remain undervalued, but the stock price doesn't really reflect that. It continues to sell off, right? So there's always going to be two different things that you have to kind of look at from both technical and fundamental standpoint. So for Chegg, like I said, valuation is really low. Fundamentals are still good. I mean, after they reported earnings, I think they also guided lower for Q4, which obviously led to a lot of analysts downgrading the stock. So fundamentally remains undervalued. The business is okay, but the stock price is not reflecting that. It's still under a lot of pressure at the moment. But yes, China stocks are absolutely getting destroyed today. So we've already covered that. So if you come over to our China watch list, I mean, you'll notice everything, just straight up, everything is down. JD.com down over 8%. We got DD down over 8%. Alibaba's down over 7.7%. NIO's down over 7%. Li Auto, XPeng down over 6%. Baidu's down over 6%. So it's all over again. A lot of the Chinese stocks. The only one that I own out of all of these is NIO. That's the only stock that I have out of all of them. But I know that there's a lot of folks that actually have positions in Alibaba, in XPeng, Li Auto. So I mean, it's very unfortunate as to what we're witnessing here. But this is what makes a market, right? There's going to be risk. There's going to be opportunities. There's going to be a lot of momentum shift back and forth, and it is what it is. I mean, we can't hide from the fact that we are going through this entire market sentiment shift on towards Chinese stocks. But again, I don't want to jump to conclusions. I want to have more details, learn more about what's going on, why this is happening, and the more information we have, the better it is, and less risk I think there is in the markets for us. So yes, we've already looked at NIO. Yes, so that's true. It's funny because these Chinese news is not even news. We knew all these companies have 3 years time to comply, and most of these companies do comply, right? Tencent just opened, so Tencent's stock just opened. It's down over 2.6% right now, but I feel like it's only a matter of time before it drops over 4 or 5% as well, and kind of joins the party for all the other Chinese stocks. But yes, it's not even news. I think the bigger piece for the markets right now was DD's delisting. I think them coming out and actually saying, and even then, I feel like it's only down over 7%. It's like, this stock is saying that we're going to delist, and it's only down 7.6%, trading at support at $7. So, I think that's the big catalyst on the day, and that obviously is rippling into some of the other companies as well, and pretty much entire Chinese market is down. And Dave, I just want to correct. It's different news that this time it's the Chinese government threatening to delist, not U.S. That's true, but that is only for DD right now. That's the only news that we've heard because they didn't want DD to list in the first place, and they went ahead anyways. So I think that's only concentrated towards DD. From what I've learned, the news that was reported by Reuters, that the Chinese regulators are actually working with the U.S. to make sure that there's no delistings happening for Chinese companies because they want them to have access to foreign markets. This was specifically, I think, for DD, which obviously is trickling into some of the other companies as well. So, there's a couple different reports that I have read that Chinese regulators have been working with the U.S. Regulators to make sure that nothing happens with some of the other companies. So this was specifically for DD, which obviously is rippling into some of the other companies as well. The Nasdaq now down over 30 basis points. We got the S&P just about flat so far, and then we got Dow Jones also flat for the most part right now. And if you go over to the S&P chart here, I want to reiterate the idea that once we start pulling back here, we will see these moments where we do rally, right? 1%, 2% green days, and that doesn't necessarily mean that we're in the clear we're back up to new all-time highs, because during that time we will see some bounces back higher, right? Dip buyers will step in, but you also have to look at on a net basis, right? Where are we from where we started and where are we trading now? So on a net basis, we started at 47.50. That was the all-time high, and we're trading at 45.85. So we're still down from all-time highs. That's what I mean when I mention like on a net basis, we're still down over 3.3%, right? So even yesterday's rally, 1.4% on a day, on a single day, can look very good. The market's doing well, but if you zoom out, you will learn that we're still down from all-time highs. So it's important for us to keep that in track. All right, let's take a look at Disney for Canal. So Disney, obviously, this has been breaking down even further. Next support level is going to be roughly at this $136 per share for Disney. So, you know, previous resistance right here, 136 is going to be that next support level to keep in mind for the stock as well. I just want to bring up a quick chart that I shared with our Discord members. So let me see if I can find that, and some of the analysis as well. So here, let me just pull this up really quickly, because it's important, right? Because, you know, if you understand, if you zoom out a little bit on the markets, and you can really understand what's going on. So, all right, this is the, all right. So I'm just going to go over this very quickly. So, you know, this is essentially what I mentioned yesterday to all of our members. I said that, remember these stats about the S&P 500 in the last 75 years, and over 18,000 trading days, the market has been down over 20% from its all-time highs only 17% of the times, right? That is to say that out of 18,000 trading days, the S&P 500 was within 20% of its all-time highs for 15,000 trading days, right? So out of 18,000 days, 15,000 of those we were within 20%. And that's about 83% of the time. So that really goes to show that we're bullish all the way long term. And these are the stats right now. You can essentially, you know, take a screenshot if you want, and kind of learn for yourself. But within 1% of all-time highs, 20% of the times, right? Within 5%, 27% of the times. Within 10% of all-time highs, 16% of the times, and within 20%, 19% of the time. So within 20%, you can just kind of add up all these, and you get 83% of the times we're within 20%. So that just goes to show that, you know, markets will pull back every now and then. These are corrections. We've seen them. Like, and I mentioned in the next post, right, that this is not something new. Here, let me just pull this up also. And this is as of you know, yesterday. So obviously the markets have shifted a little bit. So obviously it's not picture perfect. So let's take a look here. All right. And this is what I shared with yesterday as well with the members, right? And of course, this is our checklist and what we look for when the markets are selling off. A dip is anywhere between 2 and 3%. Then we look at a pullback, 5 and 7%, a correction, 8 to 12%. And then we just funnily mentioned like Black Friday and Christmas, because those are like really important deals. But I just mentioned, is this something new? No, we've experienced similar patterns in March 2020. Obviously, that was the big drop. June 2020, right? September 2020, October 2020, February 2021, September 2021, and now December 2021, right? I do think that we tend to overlook that this has happened. The corrections have happened time and time again. Pullbacks have happened time and time again. And more recently, they've happened they've happened 3 times this year alone. They happened once, twice, 3, 4 times in 2020. We were down over 7-8% from all-time highs. So it's very fresh, it's very new, and you know, there's no point for us to like be panicking or just be like being worried about the markets being down. If anything, it's great deals, it's great buying opportunities for us. All right, so Docusign looking juicy now. So yeah, I'll do actually an analysis on them very soon. Oh wow, down almost 40%. Wow. Yeah, this is just 131 is the next support level. So how much cash you have right now? I have about 17.7%. I just calculated this morning. I have just under 18% cash right now on the sidelines, which is a little bit on the high end for me because I usually am between 8 and 20%. Very rarely I would go up over 20%. Very rarely I would go down or below 8%. But right now it's just a little bit closer to 18%. But yeah, let me know what you guys have too. I want to hear from live chat. And then again, people will, you know, learn more from each other. So let us know how much you have in terms of percentage cash on the sidelines. Some people mentioned 80%, 40%, 18. I can't do a poll right now because I'm not, I'm on my phone. I'm looking at the live chat on my phone. So, all right, so 20%, 12%, well, 1%, 35% right now. That's good. 50%. Um, went in all in yesterday. I have 0%, 27, 0, 37%, probably 1%, 8%. Okay, so yeah, I mean, it's roughly between, I would say, like 5 and 20, 25, 30%, around those levels. That's good. That's good. And again, Ray Dalio also mentioned earlier, we covered that cash is not the place to be. And obviously with bonds paying so low, cash obviously not yielding anything, and with inflation where it is, it's important for me at least, personally, I do think to stay invested in the markets, um, and then just pivot into other companies as well. Wow, Mara's down over 7%. It's coming to our buy target, you guys. It's coming down in the 30s is where I'm actually very, very interested in the stock. If you pull up the moving averages, anywhere between 40 and 35 is what I'm going to be very interesting, for Mara stock as well. Because obviously Bitcoin. Let's take a quick look. Is pulling back. We're getting that second rejection from 59,000 as well on BTC, right? So this right here was that resistance that we were talking about. We got that rejection a couple times, and support level is going to stay put at 53,000 for Bitcoin as well. So Alistair, we've already gone over NEO several times. Should we buy the dip? In my view, if there's any stocks that you think are trading at very low valuations that you think you really like, I think for PayPal for me, I could dollar cost average on PayPal today, maybe a little bit. AMD, we were expecting a pullback on AMD for a long time. It was overdue, so I think I will let that one go for now. Like, not in terms of buying. Visa, I'd be very interested in Visa as well. Then we got Facebook, might average into Facebook a little bit. So if there's any stocks that you think are good deals for you right now, then yeah, I mean, who's stopping you to actually dollar cost average in those companies? But just know that there could potentially be some more downside, just given where the broader markets are, given where the S&P is, because as I said earlier, if you zoom out and you look at the where we started and where we are, we still have some more room potential to the downside. My target would be at 4,300. And if the S&P comes down over 10%, then yes, leveraged ETFs will be on play as well for me. So UPRO, QQQ, like those levered ETFs, they will be down quite a bit, right? So UPRO right now down 1.4% from all-time highs. It's down over 11.7%, right? And TQQQ also pulling back from all-time highs. It's down a little bit close to over 16.5%. So this will become buying opportunities for us to go long and take advantage of that leverage factor if the S&P, the Nasdaq drops over 10%, right? So this was shared with our Discord members as well. Let's see. So when will hedge funds realize rotating bonds, treasuries mean their clients are disservice? So great question. I think they're just weathering through the volatility. So here we are with the VIX spiking again, not really spiking, but up over 3%. On the day. So 29.30 levels is going to be that next resistance. 25 is going to be that support level to watch. And this is pretty elevated levels, right? So we have just been a lot back and forth. VIX up over 54%, then down 19%, then up 18%, then up 14%, then down 10% yesterday, and now it's down over 3%. So just a lot of back and forth. And this is, as a result, a lot of question marks being raised from the markets. So watching 30 all the way as 38 levels, but I've also mentioned that these levels do not stay there forever. You can look at the chart for yourself, and you will find that every time VIX spikes, tops out, it does come back down. And if it comes back down, that means the S&P will go up, the Nasdaq will go up. It's that simple. So if the VIX continues to be higher, stays elevated, then that's our cue to be long on many stocks. And we'll continue to dollar cost average. I want to do it at a slow and steady pace. Want to buy every single day a little bit, but obviously don't want to go all in just yet because of how much more downside I do foresee for the markets from here. My hair is falling. What does that mean? Let's see. Roku 52-week low. Square obviously has been coming down as well. So Square also, by the way, I've completely forgot. Square might be one of the stocks that I may see like a starter position here. Very small position, then all the way down to 153, 140s. Could be a decent dollar cost averaging as well. Right, and that's the best, right? Markets coming to you, prices coming to you, stock prices coming down, to your buy targets that you can take advantage of instead of us chasing those levels when they're going higher, right? At those points, then we end up paying, then we overpay for some of the companies, but right now they're coming down. That's really good for us if we find opportunities in those stocks. For me, Square still trades at a slightly rich valuation, even at 182. Square, Shopify, Nvidia, and even AMD I would put in the same bucket, as mentioned in our market updates, that trade at higher valuations. By the way, for Nvidia, I actually did read another catalyst here, that Nvidia's 40 billion ARM acquisition is now highly unlikely to go through. This actually came out today, that Nvidia's 40 billion acquisition of UK chip designer ARM is looking incredibly unlikely to go through, according to Gartner semiconductor analyst Allen. The deal is facing a growing number of regulatory probes around the world, and the analyst said, pointing to concerns in the UK, the EU, the US, and China as well. I believe it's highly unlikely it will go through. The deal was set to be completed in March 2022, but Nvidia CEO Jensen Huang admitted in August that it would probably go beyond that date. So we'll see what happens with that deal. But Nvidia just down about 2.6% right now. Just been consolidating sideways at those levels. Markets are going crazy to the indices, still have more downside, but equities are rock bottom and still going. Yeah, there we go. The Nasdaq down almost 1%, with the S&P down over 32, and we got the Dow Jones also pulling back over 15 basis points as well. So the yields are slightly up, not that much. So the 10-year yields are just at 21 basis points right now in the green. So growth market has been horrible this year. I would somewhat disagree. I think it's just recently we've seen growth stocks get hurt, because if you take a look at the relative chart performance, you will notice that Nasdaq, for the most part, was somewhat outperforming up until recently. So let's just quickly break this down from our relative chart standpoint. So let's see, sector indices. Nope, not that. So all right, let's see if I can find it. All right, let me just QQQ divided by SPY. So there we go. So right here, you'll notice that, this is the Nasdaq's performance relative to the S&P 500. And every time you see like a red square, that means Nasdaq's underperformed the S&P 500. But for the most part, this chart has just been pushing higher. That means it has outperformed. And recently, after hitting that new all-time high at 0.86, so this right here was that level, we got tapped at that resistance, and now we're pulling back down. That means the Nasdaq obviously has been down more than the S&P 500. So down about 47 basis points for this index. And right now we're seeing that similar pattern play out. So QQQ by DIA. So you'll notice a very similar pattern. However, we did break out to new all-time highs recently, right? So up until like the first week of November, we were good. We were fine. And this obviously started in December, last week of November, this whole volatility. So I do think that this is very fresh for the markets again. And we've gone through this again in the past, right? This right here was also a lot of underperformance for the Nasdaq relative to the Dow when it was down over 13.8%. Michael, how's your day, Caddy? Thank you for asking. I'm really exhausted, by the way. I came home like really late last night after the game. Had the best experience by far. Had the best seats as well. So just really fun time. Really fun time. So kind of sore today, but all right, so let's see. Yes, yeah, so no, you're right. That's why ETF, technical analysis, in my view, is not that helpful as individual stock analysis. So all right, let's take a look at Apple. Yeah, we haven't gone over Apple. We haven't gone over big tech yet. Let's just do that right here. Apple just down about 0.5% here. Amazon, we are down over 82 basis points. There we go. The market's just absolutely getting destroyed again. So yeah, I mean, the more they come down, the more red we see on the screen, the better the opportunities will be. But this time around, it will start to be a little bit different than previously what we've seen, because earlier there was still a lot of quantitative easing. Markets got bought up. Those were dip buying opportunities. But this time it's a little bit different. This time it's because of what's never happened in the last 2 years, 3 years. That's quantitative tightening. Um, so yeah, Voltruvio says, beautiful, I'm excited. That's good. That's how it needs to be, right? Obviously, we get sometimes we do feel bad markets are coming down and our portfolios are just like disappearing in in front of us. But if you look at the bigger picture, these are stocks going on sale, right? Just think of it as any other asset, right? You want to buy a car at a lower price. You don't want to overpay for that. You want to buy a house at a lower price. You don't want to overpay for that. Same with stocks. You want to buy at a lower price. You don't want to overpay for that. Elon Musk selling again. Yeah, so I did read up on that. I think the last time we checked was Tesla. Um, he sold, I mean, a little bit over 9.2 million shares. I just have to kind of double check on how much he sold recently. But this is the symmetrical triangle. And, as mentioned in our previous Tesla videos, there's going to be a lot of choppiness. There's going to be a lot of back and forth because, what we talked about was Tesla. When Musk sells, there's going to be red days. When he's not selling, there's going to be green days. And we're just seeing a lot of back and forth for Tesla right now. So $1,000 is still going to be that support. Now we have the 50 EMA sitting right there for $1,000. So it's actually exactly at 1,063. So that is going to be that next support. We also do have that symmetrical triangle right now. And I do think that he might be selling as we speak right now as well today for Tesla. Tattooed Chef is now at roughly $15 at support again. This is kind of like a quadruple bottom for Tattooed Chef. Not even a quadruple bottom. It's like 1, 2, 3, 4, 5, 6. 6 times Tattooed Chef is bounced off that 1550 levels. But of course, it's very, very weak, trading below all the moving averages. So, keep a close eye at that. One of the things that Tattooed Chef would have definitely been on my long-term fundamental list had they not, diluted shareholders, or had they provided guidance which they thought were realistic and they were able to hit. Again, Tattooed Chef is a great brand. It's a great company. Don't get me wrong. I really like. I've never actually tried their food, but from what I've heard, it's good. So I do like the brand. I do like the customer base. Everything that they're doing. Offering a lot of SKUs and going into different retailers, but just from a fundamental standpoint, from a management standpoint, had they done a better job kind of guiding us for the future, for EBITDA, for revenue, for cash flows, would have been a lot better for me to kind of project the future. But right now it's very inconsistent, so I can't really understand what the future looks like for Tattooed Chef. So 1550 is going to be that support, 24.25 next resistance for the company. Shopify down over 3.2%, also breaking below 14.38. This is also a stock I believe trades at somewhat of a rich valuation. Let's just quickly take a look. So, all right, Shopify. I think the last time I checked, Shopify was, again, triple-digit valuation. So there we go. So price to earnings on a non-GAAP basis, 224 on a forward basis. We got enterprise value to sales at over 38, enterprise value to EBITDA at over 221. Price to sales on a forward basis is just under 40, which is also very high considering it's a software company. It does deserve a higher multiple, but 40 is still very, very rich. Price to cash flow on a forward basis, 606. So, those valuations are high. Of course, the companies, they don't take long for the fundamentals to catch up to the valuations. It can happen in a year. We've already seen that with Tesla. Price to earnings dropped from 1,000 all the way down to 100, right? So that was a big, big contraction in valuation for the company because earnings grew substantially. So that can happen fairly quickly, but just given these valuations, it can also represent a lot of short-term volatility and sell-off for the company as well. So all right, I'll go over some support levels here for some of the companies, but let's just take a look at Adobe's down over 7% also. Let's take a look. So wow, 6.5%. So pretty much a lot of stocks are getting destroyed here today. A lot of stocks. Yeah, Neo's down over 10%. Alibaba's down, wow, down to $110, you guys. 110. Wow. This is just I mean, I'm speechless. I have no words for Alibaba. And I feel like there's a lot of big names in this stock. I think Charlie Munger is still in this, right? Is he not? I mean, the last time I checked, he was still buying Alibaba. There's some really big names on Alibaba right now. And it's That's why I've never pulled the trigger on Alibaba. Like I said, the only Chinese stock that I have right now is NEO, and obviously, that's hurting a little bit. But that's why, even before, even we've been talking about this stock on every of our live stream. I can guarantee you that if you watch our live streams, we've talked at least a little bit about Alibaba on almost all of them. And that's why I personally was never confident in pulling the trigger because of the regulatory risk. But this is just, I really want Alibaba to do well. Even though I don't have a position, I want Alibaba to succeed and do well because that does mean that China-US relationships will improve, and that does mean other Chinese stocks will also do well. But this is just insanity right here. I mean, yes, so Ray Dalio as well. So okay, that's good. That's good to know. Like I said, there's some big names in this stock. Wow. I do know that there's one sort of investor from India that does a lot of cloning. I forgot what his name was. I think he did exit out of his Alibaba position. But Charlie Munger and Ray Dalio, some of the big names that are still in, and then of course Demodra and NYU Dean of Valuation also now thinking about buying Alibaba. So wow, I mean this is just I have to like really think about this over the weekend now because 110 for Alibaba, like even if it were to retrace back up to new all-time highs, which happens like let's say in 5 years, that's almost 200% upside. 200%. That's like compounded basis, like almost 40% per year. Like crazy. Yeah, I'll definitely think about it over the weekend. I have to do some more research on this and do a lot of analysis, I feel like, on this. So yes, Marvel is also up. We actually didn't get a chance to talk about that. Marvel reported earnings, although we have sold off. Green day but a red candle. What does that mean? You guys already should know this. Um, so green day but a red candle essentially does mean that we're seeing a lot of profit taking for the stock. We gapped up. Now we're starting to fill that gap even further down. But still, very very strong numbers. I think reported they had a raise in their future guidance as well, coming in much higher than expectations. Um, I think it's all the games all come down to future guidance. Guidance, guidance, guidance. Companies that can guide better, that can guide accurately, that can guide higher than analyst expectations will be rewarded in this market. And regardless of what you report about revenue and EPS, um, if you don't guide for the good, you are absolutely getting downgraded from Wall Street. So Joshua, welcome on board. So we've actually covered NEO and other Chinese stocks extensively today. I mean, that's pretty much, I would say, like we've spent over 50% of our times going over Chinese stocks. Delisting for Didi is obviously putting a lot of pressure on other Chinese companies. That's why everything is down in the China watch list, anywhere between 5.5 to as high as 13%. Everything is down double digit. Baba's down 10%, XPeng Li Auto down over 8.5%, JD.com's down over 12%, Tencent's down over 5.5%, and then we got Baidu that's also down over 10.5%. So I mean, you know, Chinese stocks absolutely getting destroyed today. So yeah, not very many stocks that are actually green, and the Nasdaq's down over 1.5%. We got the SPY down over 71 basis points, and Dow Jones also pulling back here. So Kathy Wood did buy XPeng, right? Yeah, I think they just bought XPeng. The stock is down a little bit of 8.4%. It's going to be interesting if they actually do end up buying more today. So here's another thing. Here's another confirmation. If Kathy Wood's buying XPeng stock, right? And she believes, I mean, if for her to buy XPeng stock just gives us confirmation that she doesn't see any type of delisting risk, right? Because if she were to not buy XPeng at all, then there's some delisting risk. But the fact that she's buying XPeng, right, regardless of what Chinese EV stock it is, whether it's Neo, XPeng, or Li Auto, if she buys one Chinese stock, that just validates the reasoning behind that she does not see any type of delisting. Then it all comes down to competition, execution, and performance between the Chinese EV companies, Neo, XPeng, Li Auto, right? Obviously, I want all three of them to succeed. There's different markets to serve globally and in China, so they can all have certain market shares. They can all be very successful. But obviously, in any market, in any sector, industry, there's always going to be competition between companies. So I do strongly believe that for her to be a buyer of that stock gives us some confirmation that she doesn't see a delisting happening for these companies. And this is mostly a lot of negative sentiment that we're seeing around a lot of Chinese companies. But then, of course, I don't always see eye to eye with Cathie Wood. I mean, some of the valuations that she's talked about. I mean, she's completely disregarded the valuations from her thesis. She's also mentioned that time and time again that we're not looking at valuations. We're looking at the fundamentals and how they're going to grow. So to me, that's very risky. Obviously, that because I like to look at valuations quite a bit, and I only want to buy stocks that are trading at cheap valuations, and you can take advantage of in the future. But just wanted to put it out there that her buying Xpeng does validate a little bit of her reasoning and thesis that Chinese stocks may not get delisted, and this is specifically focused on Didi, as I mentioned earlier. So, Michael, wait, I thought fundamentals equals valuations. That is somewhat true. Valuations are just basically what the company's value is today and what it could grow into in the future. So for Cathie Wood to be buying certain stocks today, she may be buying at a higher valuation, like a significantly higher valuation, because of a forecast that her fundamentals will grow into the future, grow into the valuation that she's forecasted, right? So, for any specific stock that she's buying, she's looking at the fundamentals, the revenues. Let's say for Tesla, she had a thesis that Tesla's going to sell X amount of cars in the future. 5 years down the road, they're going to sell X amount of, battery packs, whatever, energy, cars, and the revenue is going to grow from here to there. And that's how the company's market cap is going to grow in the future. So disregarding the valuation today and then just focusing on the fundamentals and how they're going to grow in the future. Retruvio says my portfolio is destroyed today. Yes, so makes two of us, brother. Me too. And again, this is not just for us. It's like markets being down is painful for a lot of people, right? It's a lot of people, but it's also at the same time opportunities to buy. And obviously, I was saying that in March. Here this year when the S&P was down. So when we go back to March 2021, right here, so March 2021, February 2021, we saw that correction 5.6%, right? And look where we are now, right? We are much higher than where we were from that dip, right? 22% higher. Then we saw another one here in May. We saw another one recently in September. Then we also bought the dip here and we rallied over 10%. So So Royce, I will be possibly buying something as soon as I get out the live stream here. I'll send out the alerts to our Discord members on anything that I do plan on buying. So again, if you want to get all those real-time buy and sell alerts, the market updates, like I shared earlier, so these are all part of our market updates, like this one. So these are things that I share with the community, kind of help you guys navigate the market as well. So the Patreon link is going to be down in the description below if you want to join as well. PayPal nearing support. Yeah, I feel like 170, it's definitely coming down to that level. 182 is right now, it's where it's at. How's the FinViz chart looking like? Let's take a quick look. Not bad. Not bad as what we have seen in the past, right? I mean, Tesla's down 2.6. We got Nvidia down over 2.8. Adobe's down over 5.75%. Salesforce down over 2.7%. PayPal down over 2.6. So for the most part, I feel like consumer defensive stocks, so defensive and utilities, defensive and energy seems to be doing okay. People going more towards Costco, Target, Walmart, PepsiCo, Coca-Cola, some of the safer names out there. And we got Nvidia down, AMD down, Apple, Microsoft. So it's not as bad as what we've seen in the past. I remember one of the days it was like completely red, all red with Apple green only. Only Apple, Pfizer, and Tesla were green. But of course, in the past, we've also seen like just straight up red across the board. Google green as well, slightly up over 14 basis points. With the UNH, CVS pushing higher. Let's take a look at the entire market. So there we go. Software as a service, higher val, just absolutely getting destroyed. Team, Shopify, Snowflake. Snowflake still trades at over 95 times sales. Didi, of course. Then we got Unity Software down almost 4%. Uber, Intuit, Square. This is going to be Cloudflare, Zscaler, Adobe, Oracle, VMware slightly higher. And then these right here are going to be Chinese companies. We got Alibaba, Amazon, JD.com, Mercado Libre is also pulling back, Etsy, Wayfair, Chewy, Fiverr, DADA, whatever that is, Dada, down over 11.7%. We got Tesla down, Neo, Lucid, Xpeng, Li Auto, Nikola, Portrera, I can't really pronounce that, but PTRA also down, Ford's down, GM slightly flat, not that much, but, and Lordstown Motors also down, Workhorse is also down. All right, so let's take a look at fintech here or financials. So banks are relatively okay. They're not that bad. All right, so Square. All right, let's take a look at Square. So Square 150 is going to be that next support level. Right now we're starting to break down below 200. So I'll go ahead and turn this level back into a resistance for the stock. And next support is going to be 150. And again, I will be sending out some alerts here. Once I get off the live stream, we'll be sending out the alerts for our Discord members very soon. So, Caddy, U.S. employment added only 220,000 jobs versus 550 estimate. Don't you think this will have impact on acceleration of tapering? It could, because the thing is that Jay Powell's already mentioned that their employment target's already been met. So regardless of what the employment report comes out to be, it doesn't affect the tapering process because he's already mentioned that our target is met. For tapering, it's met, right? Employment-wise. Now, they could speed up. I mean, the conversation is going to be whether to speed up the process of tapering or not, whether to accelerate. And that's what we're going to learn in the December 15 meeting. I personally do think after all the pressure he's received, I think there may be some acceleration for tapering. I think that market's already priced that in after his comments earlier this week in the banking committee. And then that obviously opens door for us to see some type of an interest rate hike as well. So I think that's gonna be interesting for us. 220,000, obviously much lower than what we've seen, what the estimate was. And this is without even having some impact of the new variant, right? New variant, essentially we learned about it during the last week of November. So I think December's jobs report that's reported in the first Friday of January is going to be more important than the November report that we just got. So because that's going to have more of an impact on the new variant that we just got. But I do personally believe that we are going to see some acceleration on the tapering process. Ranjit, so my answer to your question, I don't quite do like specific hedging because I know that a lot of people like to focus on inverse ETFs like SQQQ or some of the other ones that are going up when the market's down. I personally don't do that because it's incredibly difficult in my view to actually time those right. And if you take a look at the patterns for this, of course this is up close to 4% today, but this also goes through a lot of decay, the overall pattern just straight up down. So I don't like to time this that much because once you get caught up on the wrong side of the trade, you're essentially, in my view, you've basically wasted the capital because regardless of how much your dollar cost average down on this, it will the decay will eat into your capital very, very quickly. So I don't personally like to hedge this way. What I like to do is just, kind of raise some cash and stay long. Like if you want to call me like a perma bull, like I am going to be bullish on the markets, long term, because I am very optimistic about the U.S. economy, the markets. The only risk that I've actually addressed very seriously is the debt levels of the U.S. I think that's one of the things that we obviously can't take our eyes off. And that's the only risk that I see. But overall, very optimistic and bullish and just kind of playing around with the cash and buying stocks at deals and just, riding them back higher. So that's kind of like as simple as it gets, right? On the markets. So, all right, let's just go over the 5-minute chart here. So we did see a sell-off in the first 30 minutes, first hour or so, actually. And now the buyers are stepping in slightly. But the VIX up over 5.4% here, just under $30. So Amazon down 85 basis points. We got Li Auto obviously down over 8%. Vertex flat. Alibaba is down over 9% to $110 a share also. So Michael, that's also a great point. So, I only trade companies that have a fair valuation and story because a trade gone wrong can be turned into a long-term position. Yeah, I mean that's actually a great way to do it because, even if you're trading, it doesn't hurt to take a look at the company's fundamentals and the valuations and learn more about the business, right? Because that gives you more confidence on the stock itself. It's mostly about conviction levels because on a day like today, the market will play with your conviction on certain companies, on certain stocks. If you're not confident, more often than not, you will probably end up selling that stock. But if you're confident, if you believe in the company, then you're more likely going to buy right at these levels. So it all depends on what your conviction is on that company. What is your confidence level with that stock? Where do you see it going in the future, right? It all comes down to that. Yep, 80% of trading is psychology. Fully agree. Um, So 3x leverage ETFs would be good for long now. I do think that we may need to wait a little bit more. Um, the S&P still has, in my view, at least some potential downside here because we're only down over 4% from all-time highs, which is not that much. You know, it may feel like a lot from an individual standpoint. I mean, if you look at your portfolio, if I look at my portfolio, of course, it's going to be down more than that because we have a lot of individual companies that are down, more than 4% from all-time highs. But since this is the average of all, it's only 4%, which is actually not that much for the broader market. So, over here we saw like 6%, I think. Yeah, so just under 6% is what we saw for the pullback. Yes, so not a crash. Again, I don't think this is a crash, or I don't think it's going to be a crash. So, I want to be very clear. No crash headlines you'll ever see from me. No crash topics I will discuss because I do think it's very important for us to distinguish between what's a crash versus what's a correction and a pullback because it kind of gets mixed in that sort of narrative that we're going to crash and the markets are going to be down 20% plus. Because if you understand the dynamics, it's a very rare to see a crash. Very rare. Like, and this goes back 75 years, guys. I mean, we're talking 18,000 trading days, right? And this is very rare occasion for us to see a crash. So, I don't think we're gonna see one. Maybe a correction, 8%, maybe 10%. I think that's about it. That's about as low as I could see us going. Um, and then over that, I think then you have to kind of, for me, I will bring my cash exposure down to maybe 4 or 6% and start buying heavily around those levels. Mohit, thank you. I appreciate that. So that picture again, you can take a screenshot of that if you want and keep that on your watch. Again, these are like not official numbers. These are mostly what you will see like being reported in the headlines. Of course, correction is official. Like anything over 8-10%, I think is labeled as a correction officially. But again, just crashes or anything over 15-20% plus is going to be potential like official bear market territory for the markets. So is VUG a good one to start a small position now? I personally do think yes, it is. I mean, I bought it at all-time highs just as an experiment, and I dollar cost averaged down. My goal is to continue to kind of keep buying every Monday. I buy more VUG, so every Monday you will see an alert from me buying more VUG. Um, so I do think, I mean, considering this is down a little bit over 6% from all-time highs as well, I do personally think that if you've ever wanted to own just a general market ETF and your plan is to dollar cost average long term, it doesn't hurt to actually start positions here um, as well. So yes, IWM was down over 12%. So Russell 2000 definitely, small caps getting hit harder than large caps, and it's down over 11.5%. So this is actually entered an official correction. Russell 2000 has. So definitely small caps, do include companies, with a smaller market cap have seen a bigger drop than some of the larger cap companies. Yes, Joey, we mentioned UPRO in our swing trade ideas. So this is a one that we've actually taken before as well. So if you're part of our Discord, you know exactly what trade we took the last time the S&P was correcting, right? So this was a drop for UPRO down about 16%. We had our entry at close to 115. And 115, we ended up rallying close to over 30% back up to 151. Of course, I sold a lot earlier. I sold at close to 130s. And I know that a lot of people sold at 140, 145. So this was the entire trade that we took last time. And we're looking to take another very similar trade if the S&P comes down over 8%, 10% possibly, right? If it corrects, in my view, that's our cue to be long on this ETF. And again, this is a riskier play, so make sure that you do understand that and do your research. Long-term UPRO, I personally don't hold it long-term because of the decay and a lot of volatility. And it tracks the underlying index, right, which is the S&P 500. So it's only a trade for a few weeks to maybe a month, but that's about it. So we'll be looking to enter this as well, closer to 112, 115 again, if we can get it at that price point, to take advantage of that rally back higher in the S&P and the Nasdaq. All right. How do you compare this dip versus May's dip? Let's take a look at May. So May was down just about 4.4%. And the only difference I would say between this one and the one that we're seeing right now is that we were just testing that 50 EMA again. So again, if you take a look at the 50 EMA, that's the yellow line on the chart, you'll notice that we have time and time again validated that support. Those are the green arrows you guys see on the chart. But this right here, we actually broke it down below the 50 EMA when we were down over 6%. And right now, we're also just testing that critical level, right? As I mentioned in our yesterday's market update, ASB, NEO, we've actually covered like extensively. Like we've talked about Chinese stocks for the first like 30 minutes. And we've actually been talking about those companies, all these here, the Chinese companies, for the better half of 50% of this video. Like this live stream, we've all been talking about Chinese stocks. So if you kind of go back on the live stream, you will hear like my take on all the Chinese stocks, on NEO and everything. We've covered the charts and everything. But talk about it again. I mean, I really don't want this to be like a NEO specific live stream. I do understand that Chinese stocks are down, but we've literally just covered this so many times. But okay, I'll touch on this again. But for now, like S&P 500, and now I lost my chain of thought. All right, let's just quickly go over to NEO then. 8.6% down, $33, $34 is going to be that next support. So $33 is going to be that support. But, you know, as I mentioned earlier, of course, every single Chinese stock is down today, right? If you take a look at the watch list. So we got JD.com down over 8%, DD's down over 13%, Alibaba's down over 8%. Then we got Baidu, Tencent, you know, Xpeng, Li Auto, NEO, everything is down over 7, 8, 9, 10%. And of course, this is obviously because of the DD's delisting and Chinese regulators kind of putting a lot of pressure on DD to kind of delist. And as I've already mentioned, I personally don't think it's going to translate over to the other companies. Obviously, the sentiment is, that's why these stocks are down. But just given the situation, given the relations between the China and the US, I don't personally think that we're going to actually see delisting for these companies, right? Because there are some big names still long on Alibaba, still long on NEO, still long on a lot of companies. So I don't personally think it's going to be actually materializing into something. Of course, sentiment is very, very down on these companies. Yeah, I might have just stamps on the side for a lot of these stocks that we've talked about, so that people can kind of go back and watch them as well. All right, so yes, I do still have Pinterest, Yenzer, very small position, very, very small position, still have that. We did sell when it rallied on that PayPal potential acquisition. We trimmed a little bit, but I still do have some. Still holding the bag on that one though. All right, guys, so actually True Leaves up over 5.8%, so that's good, not bad. Walgreens is flat. All right, guys, so I'm actually going to call it here. So thanks so much for being here. I really, really do appreciate you guys. The markets are a little bit on the downside. The Nasdaq specifically down over 1.27%. The S&P is down 0.5%, and the Dow Jones just about flat. And if I do end up buying anything, I will be sending out alerts to all of our Discord members, of course. You know, if you do join our Patreon, you will get access to our market updates. Swing trade ideas, when and where we actually decide to enter a UPRO, TQQQ, like some of the leverage ETFs as well, to take advantage of that swing trading opportunity, and of course the buy and sell alerts for our longer term positions as well. So all that is going to be down in the description below, the first link, and you should be able to join our private Discord. So thank you so much for being here. I really do appreciate you guys. Make sure that you drop a like and subscribe if you're new. And of course, the market's coming down is a good thing for us. Will always be, because we also have to understand the market dynamics, and these are just sales in the markets in my view. So thank you so much for being here. Really appreciate you guys. Hope you guys have a great weekend ahead. And let me know if you have any questions over at our Discord. I make it my priority to get back to each and every one of you guys within 24 to 48 hours. So I will definitely respond if you have any questions. So thank you so much for being here. Take care, and I'll see you guys in the next live stream. Cheers.